Hey everybody, going to go over a little bit of raising capital today. So the most of you know that Schedule 3 news is happening. We have the final hearing on that December 2nd. We're looking at some point, there's probably a little more time. We will see cannabis move to Schedule 3 and even possibly more, possibly descheduling at some point. The industry, not to mention upcoming, we've got three more states voting on rec, Nebraska, North Dakota, and Florida, who's obviously a biggie. And so my opinion is this market's going to double in the next 2 to 3 years. It took us 10 years, 11 years to get to 40 billion from zero. I think we're going to go to 100 billion over the next 1 to 3 years. Massive growth. You're going to see tons and tons and tons of companies raising capital. And so we've got to be able, as CPAs and CFOs, and accountants, to be able to offer these services. So hopefully I will touch on some of these things as well. So one thing maybe before we talk about issues, let's just talk about landing the client and pricing. So first off, sometimes you'll approach these people, oh, I don't need a CFO or accountant yet. I'm just raising money. We're pre-revenues. I don't need you. That couldn't be farther from the truth. And so I don't care what kind of cannabis company it is. It could be a small one. I'm going to start a farm indoor, massive capital, millions of dollars. I'm going to start a farm outdoor, millions of dollars. I'm going to start a manufacturing plant, make gummy bears, millions of dollars. Processing plant, same deal. Dispensary chain, testing labs. These are $5 to $10 million startups right off the bat. At minimum, I like to see closer to 10 million, or they're probably going to be coming back for more money. I've seen that too many times. People raise 3 to 5 million, and it's nowhere near enough. And so these companies could be raising anywhere from 5 to 10 up to $30 million. They're going to need their license. They're going to need to find their real estate location. They're going to need lots of things early on. But they're going to be spending money left and right. They've got to build out their team. And so when they go to pitch their idea to investors, these investors are very savvy, especially at this point in the game where a bunch of stupid deals were done the last 10 years when people were just throwing money at anything. Now they're being very picky. And so a world-class CFO is a huge piece of the puzzle. So do you think any private equity group or sophisticated angel investors are going to write a check for 5 or 10 million without having a world-class CFO on the team? They need to think about this from day one. I've seen too many pitch decks that's, oh, I'm the CEO. I got the license. And what was my prior career? I don't know. I sold insurance, or I was a nurse, or whatever it was. Maybe I was a CEO of something else, probably not. And I've got Joe or Sally who knows how to grow weed or whatever. And that's our team. We're going to add a ton of value at the very least. We're going to be the adult in the room oftentimes. And so I tell people, hey, if I'm helping you raise capital, I'm going to make sure your model's world class, your deck's world class, and I'm going to be a key component of the team. When you're out there talking to the investors to help them give you money, you're going to want me by your side to go through the numbers in the model and to help you defend them, and to give this investor comfort that, hey, not only are you going to get money, we're going to build a perpetual data room on day one. We're going to build a permanent audit trail every month. We're going to have financials up and dashboards and metrics up every single month by the 20th. You're going to have full visibility all the time, anytime. That's going to give the investors more comfort. It's going to mean they're going to be more likely to write a check, which is going to make the CEO happy. So we want to be in from day one all the way through exit with these companies. And it doesn't matter if they're pre-revenue, they're likely going to be spending $2 or $3 million before pre-revenue, including paying us. So what I might do on the pricing side, if they're tight on capital, I might be like, okay, let's build the financial model. There's going to be a row in the financial model in the assumption tab that's going to say, here, year 1, 2, 3, 4, 5. It's going to, have your CEO salary, the grower, but it's also going to have a line for accounting, tax, and CFO services, which is going to be a very broad category. It's going to include me and my team to help serve you from day one to this $100 million exit. And it's going to be a big, hefty, juicy fee. And so we're going to put that in there. And the day the capital is raised, guess what? If my fee for me and my team is 180 grand year one, the day that the capital comes in, The next month, my fee is 15 grand a month for that fee. Now, if I want to work for less between, say, it's a 6 month period from me helping them with the model and deck and raising money to raising the capital, yeah, maybe I'll work for 3 grand a month, but I want 5% equity or 7%. Or, the better the deal, maybe a little less I'll take. The worse the deal, maybe I want more. Um, and I'm going to be very picky as well. So there's many ways to negotiate how to get in there, but I want to get in there early. I want to set things up correctly. I want to make sure they've got the right software, the right insurance, the right banking, the right accounting, all those things. I'm going to be crucial. Yes, the owner and the other people, they can go plant the seeds or build the gummy bears and focus on product, but there's going to be a lot of things that are not product that they're going to want us involved in. So that's just the first level pitch of, okay, dealing with startups, how I'm going to deal with this, how I'm going to interact, and how I'm going to get paid. And I'm going to make darn sure that I'm instrumental in making sure the model is world class, including my fee, including getting it agreed on before we raise the money. I don't want to come back, oh, you raised the money, I want 15 grand a month. And they're like, no way, we're not paying you. I'm going to hire somebody else. We don't want to have that. Also, getting some equity on the front end helps align you and also helps them want to keep you because they just gave you a bunch of equity. So that's a good thing as well. And then we can go in and we can help them with so many things. I'm just looking at a startup guide I use with startups. Um, we're going to help them with the 47111, the cost accounting, all that. Entity structure is going to be a huge deal, and making sure they've got a good corporate attorney. I'm going to be involved in that as well. I don't want them having some rinky-dink attorney that's never raised capital. We want to know they've got a good attorney on board. We're going to look at entity structuring. Possibly there could be reason for multi-entity, possibly not. C Corp versus LLCs. We've got a lot of input and feedback into that as well. That's a big deal going in on day one. We need to think that through. And what the pros and cons are of the C Corp versus the flow through entity structure. And depending on what kind of entity structure, what kind of documents do we need? At C Corp, we need articles of incorporation, bylaws, minutes, resolutions, stock certificates, shareholder agreements, employment agreements, stock option plans, lots of stuff. We got to think about this stuff. Again, we're showing them that we're a deep value add advisor. We're not just some bookkeeper. Bookkeepers don't think about this stuff. We do. We think about what they need to be thinking about, their agreements, who's getting equity. Are you giving equity to the other people on the team, why, how, etc. Let's look at what else we need. What's the structure? Are we going to raise money and in exchange for equity? So I'm going to go tell investors I want $5 million, and in exchange, I'll give you 20% of this LLC, or I'll give you shares out of the C Corp. That's direct equity. Or am I going to use a convertible note, which is very common in the startup world in high tech, that puts off evaluation till later, which is very important. Convertible note that starts as debt but converts into equity once we reach certain milestones. Or maybe we want to do a SAFE, which is a simple agreement for future equity that is also used at a Y Combinator, a lot of high tech companies. We'll have input on all those structures, and we can help that CEO and owner think these things through. They probably never heard of any of this stuff. And then what documents do we need? We need the term sheet. We need investor suitability questionnaire. We want to make sure we don't violate any regulations around 504, et cetera. We need an investor rights agreement. We need the convertible note agreement, the safe doc. Are there any ongoing stock option plans or things like that? Lots to think about as well. We need to think about exit from day one. We want to be building a perpetual data room immediately. What other pre-revenue concerns? Is the license in place? What's the seed to sale software? Do we have the real estate location tied down? Have we considered all the tax issues? Also, what are the investors' issues? Are they more concerned about asset protection or tax minimization? We need to look at that. So lots and lots of things to think about on that front. Also, we're going to make sure we're doing the accounting, even if it's pre-revenue. They want world-class accounting from day one. They don't want to wait till revenues. We're spending money. It may take us a year to build out manufacturing plants in the farms, and we're spending millions of dollars. We need to account for it correctly as well. What else do we have? Oh, controls, governance. Are we putting together internal controls from day one, building an accounting policy and procedure manual, following those SOPs, having adequate segregation of duties? Do we have board minutes and board meetings set up? Do we have other corporate governance structures and risk mitigation, including insurance, in place to protect those investors' money as well? Again, most decks don't address this stuff. Investors are going to be super impressed. Oh, wow, they thought this through, internal controls, etc. Um, what else? Oh, the let's talk about deck and model. I won't allow my clients to get anywhere near an investor until the deck and model are world class. And I like the model to be done first. The deck's going to contain many items out of the model, like revenues year three, or EBITDA, or margins, or unit economics. So we want to get our model tied down first, and we're going to start with the assumptions tab. Um, we want to make sure it's not messy and just some random Excel spreadsheet someone built. I want to have a summary tab. The way I build it is right to left if I'm looking at my Excel in tabs, and then the way I want the investor to see it's left to right. So when they pop it open, it's going to go right to the summary tab. It's going to show key metrics year 1 to 5, revenues and EBITDAs and exit values and ROI in your investment at year 5 based on different multiples and financial ratios. And that's going to be real tight and narrow, and also show the offer and what they get. Then we're going to go balance sheet 5 year, P&L 5 year, P&L probably 24 months. Behind that, statement of cash flows, and then assumptions tab. Very clean, simple. It just flows equally down. But we build it the other way. We start with the assumption tab way over here, and we look at things like how much capital are people putting in? What are the sources and uses? I need 5 million. What for? Oh, I need 3 million for the land and a million for equipment and 2 million working capital. What are those sources and uses? What's the payroll going to be for everybody? What's insurance? What's rent? What are all those different metrics? What's the size of the farm? What's our production plan? What's our growth cycle each year? How long does it take us to get to growth cycle number 1, building out the farm? When do revenues flow in? What's our pricing per pound? Do we have the ability to do what if scenarios? What if we think we're going to get 1,500 a pound in year 2, but what if we only get 1,000? What happens to our model? Do we need more capital? They're going to really appreciate that we think these things through in advance and allow for what if analysis so that they can look at as an investor, okay, here's their expected plan. It actually looks reasonable. It's a solid plan, but here's the worst case plan. If things don't go according to plan, okay, we still do okay. Here's the best case. What happens if things go even better? That's great. I say we always hope for the best. We plan for the expected, but we prepare for the worst because we need to do that as good CFOs. So that's our model. Then our deck we'll start building out. Most decks I see are missing tons of these components. We want to have a great story. I don't want the story to be, oh, I'm the world's best grower of weed. I'm going to make better weed than everyone else. And so everyone's going to pay more for my weed. That's not a great story. What's your story, your unique value proposition? Who's the team, including the world-class CFO? That's hugely important to show. Does a CEO have experience? Have they been there, done it? Who is the grower? Who's manufacturing? Do you have any expertise in the lean methods? The better your team, the better your chances of succeeding. Do you have a good board and advisors? You may have to give a little equity for this for legal advisors or software, whoever it is that can round out your team as well. Have you really done a deep dive into your individual market, your state and city? What's your market share? What's your competition? What do you expect in the future? What do you expect around 280E, et cetera? What about unit economics? Price per gummy bear? What are unit costs? What are gross margins? What's your overall business model? Where are your revenue streams coming from? How are you going to build your brand and gain market share? What's your financial model? How does it tie into those two things as well? What about investor economics? I give you 5 million. What do I get back and when? Do I get dividends? Do I get tax bills? Do I get a big exit in year 5? What does that look like? What is my IRR and ROI? What's the pre-money valuation? What's your company? If I give you 5 million, Do I get half the company or 10%? If I get half the company, you're basically telling me the company's worth 5 million before my money and 10 million after. And so is that reasonable? Do you have something, some traction to show that? If the valuation is not reasonable, you'll never raise money. Sources, uses of capital, make sure you've got that. Make sure you have an offer in there. I saw a deck this week with no offer. It said we need 3 million, but that's not an offer. It's like selling your house. It's like, if you give me 1 million, I will give you my house. That's an offer. It's an exchange. But if you just say I need 3 million, what do you mean? Are you going to the bank to get it and having a loan, or you raising equity? What? Make sure you have a legitimate, well thought out offer. What's your sustainable competitive advantage and what traction? Do you have that license? Do you have some key milestones? Maybe you've actually sold some weed. That would be even better. Do you have disclaimer language? Do you have the legal language in your deck with the attorney to make sure you're not violating any state or federal laws? Are you showing this deck and model to the appropriate people that have filled out an investor suitability questionnaire? Do you have a plan around inventory and cash controls? What POS system are you going to use? Do you understand the POS? So lots to think about. Yeah, tech stack. What else? I'm trying to think. Insurance, banking, merchant services. Have you thought through compliance, OSHA, EPA, et cetera? Do you have any friends and family money? That's always a great start. Your neighborhood, the people you know, your doctor friends or lawyer friends. If you're raising 10 million, get 1 million from you and your group first. You'll raise the rest easier. So lots and lots and lots to think about if you're raising money and helping these clients. We can help them. If you're a CPA or accountant or CFO, our program will greatly assist you to go out and land and serve startups well. If you're a cannabis CEO or investor and you want to learn more about our solutions, reach out to me. I'm at Andrew at dopecfo.com. You can find us at dopecfo.com or dopecfo.us, and we can help you easily there. All right. Thanks for watching today.